What's going on, guys? Welcome back to my YouTube channel. And today I want to talk about there are two things that I want to talk about. Today there were a lot of failed second entries long, so we're going to talk about how to recognize a failed second entry long in a downtrend and failed second entry overall. And the first pattern of the day was this last bullish attempt, last bullish momentum. This is the video I made called last bullish attempt, I think. So if you didn't watch it, go watch that. It's a great video. And you can see the pattern was fairly similar because we started with the uptrend working up high. We have a one leg. The market went into consolidation, a little bit undecisive, and we have a second leg up. One leg, pull back, second leg up. Market moves in twos. This is a two-legged move. And you can see once we are making the second high right here, the second leg, we're making the new high. This last bar is very bullish, and look how far away you are from EMA, and you're not gonna stay away that far away from EMA for such a long time because EMA keeps pulling prices closer to it together, and there are no more limit moves in the market. 20 years ago or 30 years ago there were limit moves in the market when the market can keep going higher and higher and higher and higher and higher and higher. But these limit moves, they are no longer allowed, and they're no longer happening. I don't think it can even now work with the modern electronic systems. But nevertheless, the limit moves are over. So there's not going to be moves where the market keeps going higher just straight up in 90 degrees. We're going to pull back lower. So once we had this last bullish momentum, I knew a lot of longs are going to be taking their profits, which is what is happening. And we're probably going to have a correction or possibly go into downtrend altogether. And this is actually what kept happening. And you can see we're working up lower. We have this, how we identify downtrend, lower highs, lower lows constantly. Each new low is lower than the previous one, and each new high is lower than the previous one. So we just have a bunch of first entries, and the first entries are not reliable. We have to wait for second entries because at the key entry points, that's the high probability setup as we can. So as a day trader, we are just sitting patiently and waiting for second entries at key entry points. So just if you was trading this, you would just be watching this, observing this, keep market continuing being in a downtrend, and you have a new low right here. First entry short, trigger one tick lower below this bar, pull back, second entry short. We have a break and a new high. So this bullish correction played out, break and a new high. We are at the key entry point, trend line, EMA, and it is a second entry short, and this is a good signal bar. And signal bar, when I'm talking about signal bars, I mean signal bars equals entry bars, the way I'm explaining the price action. So we have a good signal bar. You can see a lot of bulls were buying the market, and at the very close of the bars, all the bears jumped in and shorted the market. And this is the exactly momentum we want to see at the key entry point and as a second entry. So this is, market is giving you so many clues right here that it's going to go short. This is such a high probability setup. It's going to work 9 times out of 10. We're continuing going lower, and we have a first break right now. You can see we pushed through the EMA, but this is no reason for us to start panicking. We are reversing. It's too early to be counter trend trading. It's too early to be looking for a reversal. We don't have a new low of this downtrend working up lower, and this is the price action rule. After a break of a trend line, there's most likely going to be a retest of a new low. So we cannot go long way too prematurely. So don't panic when you see a break of a trend line like a lot of traders teach on YouTube. Buy the breakout right here, the break of the trend line. No, be patient, be one of those smart traders. This is how institutions do it. We have a new low right here, pull back, first entry long, a little bit tick higher, and a second entry, pull back, first entry short, a little bit tick higher, and a second entry short. Nice bearish reversal bar, big bearish body. We closed below the EMA. It is the lower high of this one. We are waiting for a new low, second entry short. Once again, price action keeps giving you reasons why to go short here. The price action is not that complicating if you follow the rules, and you can see how it ended up being. And I actually took this trade and I had no idea at the time what's gonna happen next. I was caught off guard by this so much. I was expecting some sort of support and key level to form here, and we just, for some reason, some institutions started selling big time. They were dumping all their shares, and you can see how big of a move this was down. And this was the point where volatility has picked up a lot. And I'll tell you this, when I took this trade, I went for 8 ticks. I went only for 2 points because the yesterday was so slow, and the day before we had such a slow volatility that I a little bit tightened my target today because it looked very slow, but after we rallied up lower like this is where I increased my target back to 10 ticks. And you can see the big move down working lower. So we are now officially in a downtrend. Once we are, you know, going lower and lower like this, forget all the longs, forget picking bottoms, don't concentrate. This is just a knife falling down, and don't try to be catching the knife. And you can see this is a bunch of first entries. You're not close to key entry points, so just wait, sit here, let this go. I know it's a little bit sad to see this go without you if you miss this trade, but be patient. There's going to be plenty of good trades according to our rules later. And you can see we have this uptrend working up higher, and it was fairly hard to find this trend line. I was playing with the trend lines, and this is what I end up with. And it fits a little bit nicely here, and this set up the trend line, so I played it as this trend line might be correct, and it ended up being correct, it looks like, at the end of the day. But notice right here, we are working up higher. There's a trend line. I don't have it drawn, but there it is, this correction higher. And what are we expecting? We have a break, and we are expecting a new high. But you can see we cannot make a new high because the trend line is in play. So a lot of sellers are watching this, and they're tempting to go short. But nevertheless, just because there's a trend line here, it doesn't matter. We're going to automatically short because we can still make a new high through the trend line. So we have a first entry long right here, and at the EMA here is the place where we would be looking to make a second entry long and to make a new high, but it didn't happen. We make a first entry long, we fell, and we fell big time. There's a big bearish bar. We sliced through the EMA like it's not even there, and notice how low we make the second entry long. It's too low. The correction is way too deep, and when the correction in a downtrend is way too deep, this is where the longs are trapped. So I like taking this failed second entry long, and this is what I want to talk about as well, because today was failed second entry long here, here, and here. It's kind of a theme for the day. A lot of failed second entry longs today happening. So this just shows you that in a downtrend, you're looking for second entry shorts. But if you cannot get the second entry shorts, the failed second entry longs are good enough as well, because a lot of people are going to be trapped. So we have a first entry long, second entry long that fell right here. And I talked about this pattern in one of my live videos. The same thing happened. I was waiting for the new high, but the second entry long happened way below EMA, way too down. Now it's way too late to go long. The second entry long should have happened at the EMA, and we would be making a new high, but it didn't happen. It happened way too low, and the bulls are trapped. So quick, easy scalp right here. And then we just make a breakout pullback to the close to the trend line and to the EMA, big bearish bar. I think it's worth taking a shot here as well. So we're just making it lower, and you can see once again first break of the trend line, and it looks like we made a double bottom, which we made, but it's still, be patient. It's too early to go long, and a lot of beginner traders, they start panicking because they probably don't even see the trend line. They're not looking for trend lines, and they don't follow the price action rules, and they don't know that after break of a trend line there's going to be a new low. That's just how human psychology works. And a lot of people who don't know this rule, they're starting to buy here, and they're just getting trapped. So we have to, it's sad, but we have to take advantage of their pain, and we have to take the other sides of the road. They're buying, so we're going to be selling, and we have a new high right here, pull back. First entry, a little bit one tick higher, so first entry trigger right here, failed. Second entry, a little bit trigger right here, failed second entry long, beautiful bearish bar at the EMA. EMA is holding prices. I tried to enter here, put my limit order back, didn't get filled. You can see we didn't tick higher even one tick. We just straight up, boom, raised up lower. It was a little bit sad. It would have been even a good runner. Nevertheless, I missed this trade, but still, first entry long, second entry long, first entry long, second entry long. And this, in a downtrend, failed second entry longs are very powerful. They're as powerful as second entry at the key entry points. And if you have a failed second entry long, and you have a breakout trend line, you're waiting for a new low, such a high probability setup. So hopefully you guys can see how trading can become easier once you follow the correct rules. Just skip these first entries and these random trades, picking random bottoms and random tops, a bunch of first entries far away from key entry points. Stay away from this. Just be patient and wait for prices to come to you, to your setups. And you can see you have a break, new low, and we're starting to new low, and we're starting to reverse from here. You have a trend line working up higher. If we have a break, and we have first entry short, second entry short. Do you see the difference? Fell second entry long in the downtrend, and now failed second entry short in an uptrend because we have a break and a new low. So this downtrend has played out and now we're in an uptrend. Market is switching gears. So now we're looking for second entry longs or we are looking for failed second entry shorts. This trade would have been, this is very tempting trade. First entry short, second entry short, they failed. You can see how EMA is holding prices on both entries, which is perfect sign, very good sign. But the body is bearish and there's stims on both sides. If the body was bullish, I would probably advise to go long here. But still, the downtrend looked fairly strong. So I still would probably wait to play this out. And this is actually how I played it. I wait for prices to make this 2 legs to a new high. And once we made 2 legs to a new high right here, this is when this bullish trend was over. And at this point on, once this trend is over, you would see it like this. Now you're looking for reasons to go short. So you either gonna wait for some sort of failed break higher or failed second entry long. And this happened right here. New high, first entry long, pullback, second entry long. We closed above the EMA, which is fairly disturbing. It would be much better if we close a little bit below EMA. But there's some resistance forming and the big part, just like it happened right here at the start of the day, bar looked very bullish at the beginning, and at the very close of the bar, everybody started selling. And this is exactly what I want to see as a failed second entry long. And this is how you see it's a trap, because it looked like second entry long, a lot of bulls, and the bar is big and it has such a big bullish body, and you see, okay, we're going higher, trend is continuing, and they got trapped. Everybody just started panicking once it formed this reversal bar, and everybody just sold off instantly. So this is why I like taking this failed second entry long. And once again, at the key entry point, we have a double bottom right here. We're forming some top here. So we are switching in the trading range rules. And how you trade trading ranges, you buy the lows, you sell the highs. So if we have this downtrend working low, we have a break, multiple legs to a new low. But we cannot buy this low because the horrible signal bar, this bar is way too big. Bullish uptrend. And then we went into this consolidation and we have a first entry long, second entry long. Very tempting to take this second entry long because we are coming off the lows and we have a first break of this uptrend and we are probably waiting for a new high. But right now the bars are starting to stack up. We're going sideways, up and down, up and down. The EMA is completely flat in the middle of those bars. And you are exactly in the middle of trading range. And the middle of trading range is a no man's land. And that's not, a lot of people get chopped into this, especially beginner traders. A lot of beginner traders, they get chopped into pieces in a no man's land. It's much safer, as scary as it is, to pick tops and bottoms in trading ranges. This is the only profitable strategy. In trading ranges, picking tops and bottoms, I know it's scary. I know it's looking like it's not going to work, but that's the way the market is designed. It's just going to work. That's just the way, the fact that it is so scary, that's exactly what helps us as a trader, because I know a lot of people are going to be shorting the support and the smart people are going to be buying. So use the fear of other people into your advantage. And this is why our rules are here in our place, because they use fear of other people into our advantage. And you can see working up higher, break, and a new high. So once again, bullish correction is over, and especially in trading ranges. In trading ranges, don't forget drawing these shorter term trend lines. They're a must. In trading ranges, they're a must. They're a must everywhere, but they're especially must in trading ranges. So we have a break, new high, quite small bar, bearish bar. It's worth taking a shot. Yeah, it could easily make it up higher, have a failed break higher, and then go lower. But you don't really know that. So don't be too hard on yourself when you have a loser, because sometimes anything can happen. Just buy the lows, sell the highs. And if you take all these trades, you will be 70%, 80% winning. So overall, but what most people do, they will see a lot of these trades, they will pass on to these trades and they will sell one top and it just won't work that one time. So they ended up with a loser, but they skipped a lot of good trades. So don't be afraid to have a loser. That's just part of trading. It's like when you're boxing, you're just gonna get hit. Even if you're Floyd Mayweather, you're just gonna get hit in boxing. That's the same in trading. You're just gonna have losers. So don't shy away from losers, embrace them. And you just have to take the opportunity. So, and once again, you're working up lower, nice downtrend, break, and a new low. Beautiful bullish reversal bar, triple bottom right here. You know, a little bit far away from EMA, which is good. You're probably gonna snap back. You have to take the chance going long here. You have one more little bit push lower, and I was a little bit afraid the way the prices turned down here. I was afraid the market can now go lower, but you can see they just need to trap a little bit more bears, and the bar is fairly big too. The way the volatility has picked up, the bar is really big now. It's like 6 points or whatever. But I like taking this trade. This is a first entry short, pullback, second entry short that failed this beautiful bullish bar, and it's a first entry long, pullback, second entry long. And now this setup is very similar to this one. But what's the difference here? The difference here, we are much closer to the support and we are coming off the support. So if you push it a little bit higher like this, few more ticks a little bit higher, you can see we are retesting the support, the key level. First entry short, second entry short, we are retesting it and it's rejecting and we're going higher. But I'll say this is very similar to this one. There's a little bit more bars going sideways, but here we're just exactly in the middle of trading range. And this is what was scary. Here we are a little bit lower, we are close to the support. Here we're exactly in the middle. But you can see this setup still worked going long. So you cannot deny that this, you know, setup works, but I think it's a little bit too risky to take this congestion long. I think it's good to take this long. And this was the last setup that I marked. It's 8 o'clock, so it's quite late. I gotta get out of here, but hopefully you guys can see how to follow price action. The failed second entry longs were very good today. Follow the key entry points. I mean, this setup was so easy to take. You know, it's not every day you get, you know, the perfect setups, because we met the key entry point rule, we met the second entry rule, we met the good signal bar rule, and we met the break and a new high rule. So a lot of attempts, a lot of ways to go short here, a lot of reasons to go short here, excuse me. And overall, and I'm glad the volatility has picked up, so you can increase your profit target once again. And you can see if you just follow the rules, the trades are working for much more than 10 ticks. But you know, I found the 10 ticks to be a sweet spot, because you just don't want to gamble, because some days when the volatility slows down a bit, you just don't want to take the risk. The 10 ticks is the sweet spot. It's the good money management ratio, because most of your loss is going to be around those 10 ticks as well, 8 to 10 ticks, sometimes even more, depends how the bar is big. And definitely study this last bullish attempt. You can take a quick peek at my video, why I described it as the last bullish attempt and why it worked. But nevertheless, hopefully this video was helpful to you. Like the video if you liked it, I would appreciate it, and see you guys in the next one. Bye guys.